Hi, this is Kerry Artak with Wicked Stocks, bringing you your weekly Mag 7 update on our Wicked Stocks YouTube channel. We do this every Monday. This is for the week of Monday, January 26, 2026. This is Microsoft. We begin there. This is a long-term 5-6-year channel structure, the top of which we pushed into and certainly tested last July and again in October. There's an inside band. You could combine these two as a range of resistance that may well absorb buying through all of 26. And I don't know if we'll see it again in 26. We'll get to that in a moment. Holding below channel resistance does allow, and I use that word very deliberately, not indicate or we don't expect 389.44, but you should at least allow that in your worst case, I think, worst case scenario for a possible a trade level, a possible objective is probably a strong word. I'll get to that in a moment as well, but 389.44 is a 5-6-year channel support that, if tested at any point in 26, may well absorb selling through the year. And from here, we can round up to new highs, round back up to the channel top within a year or two of activity. Let's take a look at kind of the nearer term. And, here you can see 489.58. That is a horizontal channel bottom that we settled below back in November, indicating then kind of a full channel extension and the 5/8 Fibonacci, both in the same vicinity between 425.36 and 427.04. In the last couple of weeks, we've been well on our way to reaching it. Last week, we put out a new low, but closed higher on the week. So this suggests a diminishment of the bearish momentum. We may actually see 489.58 over the next week or two, following last week's late week recovery. The 489.58, if tested this week or over the next few weeks, can continue to contain buying through February, and from here we can fall away again. If we happen to continue south from where we are now, and that's very possible, the 425.36 to 427.04 region well equipped to absorb selling not only through February but even perhaps into the second quarter, and from here we can round up. We could trade inside what I would just call the upper 420s to upper 480s for the next few months. If we did close back above 489.58, then our focus shifts back into the bullish column as we move into February, March, the following couple, 2-3 months, then in reach yet again of the 555.52 to 580.35 region. So closing above 489.58 is a valid buy signal into the second quarter, expecting at least the 550s within several months. Until then, there's nothing to do but sell the market at 489.58 and buy it aggressively at 425.36 to 427.04. If we were in the coming weeks to close below 425.36, then that previously mentioned 389.44 channel bottom likely within a matter of weeks, where once again we could bottom out through all of 26. On to Meta. Meta obviously had a reversal last week. You can see this outside week. We put out a new kind of a 2-month low and then closed above the previous week's high. This definitely is another neutralizer of bearish momentum, and I wouldn't be surprised to see this 692.77 structure possibly this week, I think over the next couple of weeks. And this is an area, a couple of things about 692.77 that can contain buying through February, and from here we can fall away again, fall away to what would then be channel support and potentially back to 564.94 within a month or two of testing 692.77. If I were to look for two key areas to trade between now and into March or through March trade, it is selling 692.77 and aggressively buying 564.94. 564.94 is a longer-term structure. You could actually buy this into the third and fourth quarters of this year. We can round up to new highs from 564.94. 692.77 is also our upward pivot point. So if we were to close above 692.77, I would expect, continued aggressive gains into really February, March, maybe even April, 2 to 3 month rally then into the 785.23 to 796 and a quarter region, back to this high area within 2 to 3 months of closing above 692.77. So closing above 692.77 is a solid buy signal into the second quarter, then expecting the mid 780s to mid 790s within 2 or 3 months. On to Alphabet. Alphabet, once again, it's just such a vertical move here. There's no point in trying to pick tops. There's no point really in trying to find where is the sellable resistance. You're long and you stay long if you're already long until you actually get a sell signal on weakness. And that, at this point in time, at least as we move into the second quarter, would come with a settlement below this classic rising channel bottom that this week is at 306.11. Until then, 306.11 is a solid area to step into and buy Alphabet as we move then through February and into March. If we close this week, Friday, below 325.00, and that is the low of the high, then we should, within 1 to 2 weeks, test 306.11. Rising weekly, able to contain selling on a monthly basis, and from there we can round up to new highs. Once again, closing below 306.11, just the opposite. We have a good high into later year, through the second quarter anyway. The following 2 to 3 months then expected to fall into the lower 230s. This 231.19 former rising channel top, where that big rally really began, in my opinion, back in early September. That bullish momentum remains intact above 306.11, and if we close below 306.11, expect continued price declines into the 230s and climbing within, I'm going to guess, 2 to 3 months. But until then, if you're looking to buy Alphabet, you can do so at 306.11, and we actually could push to new highs from here, holding above 325.0. On to Amazon. Amazon has a channel bottom here. We came close to testing last week. This week, 225.55. This is a base of support that you can buy into, not only through February, but into the second quarter. And from here, we can push higher into, I could just actually jump to that chart right now, into the 270s within, I don't know, I'm going to say 2 to 3 months from now. Certainly closing above 256.76 would accelerate upward momentum, and that could be in as little as 2 to 3 weeks. So, the way I would play this is you're bottom picking 225.55. Near-term swing traders are selling, taking profits at 256.76. And if you don't take all those profits, you can hold out for a settlement above 256.76, then expecting the upper 270s within another 3 to 5 weeks. So holding above 225.55 does maintain the likelihood for the upper 270s over the next 2 to 3 months. And on the way up, 256.76 is a solid zone to take some profits in if you're more of a 2 to 3 to 5 week swing trader. Now, downside, if we happen to close below 225.55, then we have a sell signal. Through February, within 3 to 5 weeks, I would expect 205.52. And I do think a violation of this 9-month rising channel bottom at 225.55 does carry with it 178.70 as a possible 3 to 5 month target. On the way down, though, the 205.52 formation can contain monthly selling pressures, and we could come off of this area nicely on a multi-week basis. But as we were to continue through the second quarter, I would expect 178.70 following a settlement this week below 225.55. So if there's an area to buy Amazon right now, it's in the mid 220s if given the opportunity. And one more thing on strength. There's just not a lot to sort of lean into until you get to 256.76. So if you're looking to sell the market, 2 to 3 to 5 week swing traders could sell 256.76 and then buy back any downward retracements to the 225.55 area. Closing above 56.76 does indicate the upper 270s within 3 to 5 weeks. On to Apple. Apple, we provided our wickedstocks.com paid platform. We've been providing it for, 3 or 4 years. It's a weekly analysis we provide, and we really get into 8 to 10 minute video where we break down the short-term, near-term, mid-term, long-term. This is just long-term, big picture stuff, and I have been mentioning how this 285.25 5-6-year channel top, which we did test back in December, can contain buying on an annual basis, and now that we've done it again, over the last couple of months. This 214.82, 5/8 downside Fibonacci in reach over the next several months, perhaps. And ultimately, we could see ourselves back in the upper 180s over the next full year because we could trade inside of this 5-6 year channel structure for years to come. And what I mean by that is for the next few years, because from here we can fall back into the upper 180s and climbing. So if we were, however, to close above 285.25, and that is not going to happen this week, but if over the next couple of months we do, then we enter another significant phase of longer-term buying that should, over the following year, two at the most, reach that 384.97 full channel extension. But we have in our Wicked Stocks .com analysis of Apple every week. We provide you, tradable levels that are of 3 to 5 days and 3 to 5 weeks swing trade duration. Let's move on to Tesla. Tesla we provide every single day for free on our YouTube channel, but it's just a reminder that 407.16 is a longer-term support that, if tested over the next week, 2 or 3, can absorb selling into the second quarter, and once tested, we can round up to this 533.24 6-year channel top. And those are the two big parameters here as we continue through the second quarter. On the way up, 473.82 can contain weekly highs. That is the low of the all-time high. And if we were to close above 473.82, that sets off an intermediate buy signal that should, over the following month or two, reach the 533.24 6-year channel top, where Tesla could actually place an annual high. Now for the downside, if we do close below 407.16, that indicates a good first quarter high. The following I'm going to say 1 to 3 months, depending on volatility. A high volatility sell-off collapse should certainly be 3 or 4 weeks, and we've seen that before. But the likelier outcome is the better part of 2 or 3 months, where 312.53 rather would be considered a 2 to 3 month target were we to close below 407.16. And at 312.53, we could bottom out on a quarterly, possibly into later year basis. On to NVDA. NVDA we provide every single day on our wickedstocks.com paid platform. So this is broad brushstroke analysis here in our video every single day, as you might remember on YouTube. We provide, a 5 to 10 minute video every day where we break down the day trade, 3 to 5 day, 3 to 5 week swing trade. And here, this is big picture stuff. We did test a 9-month channel bottom last week at 179.92. It can continue to contain selling into the second quarter, above which the 207.86 structure remains a 3 to 5 week target. And that over the next 3 to 5 weeks, by the way, early March, actually converges with the 219.64 full wave count. That is A minus B plus A. We'll be breaking this down more for you if we presumably continue on up into the 219 to 228 region. But holding above 179.92 will, over the next several months, likely yield this 219.64 to 228.94 region. These are two long-term wave counts that this inside channel we've been converging upon anyway by early March. Now for the downside, closing below 179.92 is a meaningful sell signal for NVIDIA. And I think over the next 2 to 3 months, 3 to 5 at the most, we can find ourselves in the upper 120s and climbing. The 128.87 3-year channel bottom, well suited to contain selling through the rest of the year. And finally, Palantir, not part of the Mag 7, but we've been providing it anyway. A lot of questions about this. We did open and close last week below this 1-year channel bottom that this week is at 175.64. If you're looking for a place to sell Palantir, it is at 175.64. Expecting now, I think this is a 3 to 5 week move. Could take the better part of 2 months, 135.22. This descending channel bottom will, by later March, converge anyway with this 125.49 spike high that was put out in February of 25. So it really is a mid-120s to mid-130s narrowing weekly objective that we do maintain now below 175.64. On the other hand, if we close this week above 175.64, that would be the rejection of a pretty classic longer-term sell signal. And with that, I would expect, you've got a rising channel top at 206.41. You've got a more horizontal one at 212.34. If we close back above this 175.64 channel bottom, I think within about 3 to 5 weeks, we could push into the 206.41 to 212.34 area, narrowing gradually and able to contain buying on a monthly basis, possibly longer. I am going to leave it at that for this particular, this week's Mag 7 update. You have a great week.